Aloha, and welcome to the Sylvan Bell Business Growth and Exit Strategy Podcast, your guide to building companies that command maximum multiples. I'm Sylvan Bell, author of 5 books on business strategy and sales, creator of the Sell Framework, Scale Framework, and Driver Test. I work with owners of $10 million to $250 million companies, whether you're scaling for growth or positioning for a profitable exit. Each episode breaks down one framework, strategy, or concept you can apply this week to grow revenue systematically, scale operations, and maximize enterprise value. Let's get started.
Aloha and welcome to episode number 25, Clean Financials, the foundation of credible valuation, aka your business history. This is probably one of the more important topics when it comes to you preparing to exit or just grow your business. Now, let's say that you decide that you want to exit. What you need to know is if business owners can't trust the numbers, they won't trust the deal. They're looking at the history and they're saying, how real is this? They're looking at your financial credibility and the starting point of your enterprise value when you go to exit. And from here, I want to introduce you to two people, Excel Eddie and Excel Edwina. And Excel Eddie or Excel Edwina probably went to a prestigious university. They've got an MBA and they're very good at Excel. They know the formulations, they know the pivot tables, they know everything. And then here's the other thing they know ratios and they know risk. So what they're going to do is they're going to take your documentation, they're going to put it into a machine. The machine is going to spit out files and they're going to say, here's the number. And if you have clean history and you have clean financials, it makes it easier for them to do the work. You want them to have ease for what they're doing and make it so that they can get to a number that you can agree upon. And this is going to happen with accurate, accrual-based, timely reporting with consistent categorization and documented adjustments. It doesn't mean it has to be perfect. It needs to be defensible. You need to be able to go in and say, hey, listen, there might be a couple of bruises and scrapes in here, but overall, this is ready to go. Because this is a trust multiplier. Your sophisticated buyers, whether private equity, whether an individual investor, are willing to move faster and pay more when your reporting is professional and predictable. Once again, we're going to go back to your history. They want to make sure that it's clean. If you have messy books, you're going to create friction, delays, and price dings and dents, as I like to refer to them as. You want to have your proof preferably 3 years out, minimum 2 years out. And the reason for this is, like, a lot of times companies, when they come to buy you, private equity investors, and say, I need 3 years of financials. Well, if you've got 2 years of really clean financials, that works to your favor. If you've got 3 years of really clean financials, it signals that you've really made some good decisions in your business. What they're saying is, like, how good of decision making do you have when it comes to running your business? And part of what we're going to take a look at is your history of financials. So this comes down to EBITDA or EBITDA clarity, however you want to pronounce it. Some people, it's like niche or niche, right? There's like pronunciation differences. You want normalized earnings to be supported by documentation. If you have add backs and you're trying to prove them and there's no proof theory or thesis behind it, they're going to go, that's not real. We're not going to add this money back in. And if you're dealing with Excel Eddie or an Excel Edwina, they've seen all the games. They've seen all the places where people try to hide money, move money, stage money, be creative with financing. They're going to catch it. This is what they do all day, every day, and they're good at it. That's why they're paid maximum money by private equity and investors to take a look. In order to make all of this work, you need a monthly closing discipline. You want to close your books within a defined date. So when I do consulting, this is my example that I use a lot. If you take the month of January and you're closing out your books should be closed out by February 8th, 9th, or 10th. If you're working on the books for February, they should be closed out by March 8th, 9th, or 10th. Here's a surprise. If you're doing March's books, they should probably be closed out by April 8th, 9th, or 10th. And this consistency helps. Now, I'm going to deviate a little bit off of the path of this episode because I'm going to share with you something that I see in quite a few businesses that I consult in, have conversations with, or have actually been in. A lot of the bottlenecks inside of an organization come from accounting. They come from your bookkeeping department. And for whatever reason, there's typically a person in there that likes to be in control, that likes to do things their way, that is not good at delegation, that will hold everything up, and then they'll give you every excuse in the book. I'll delegate that. I'll get to that. It's not a good time. I'm working on so many projects. You have opportunities here. And I'm going to let you know this from the very beginning that there are accountants that graduate from college every year. So you're not talking about a job or a role that can't be duplicated or can't be replaced. It just seems like that. And so there are companies that are fractional accounting companies where you can hire them for help. This is like section 2 of the bonus content. When you bring somebody in, accountants inside of organizations tend to not want to share information. So there may be some decisions that you have to make about, okay, we're 3 years out, 4 years out from the sell. We've got somebody who doesn't want to play ball. What do we do? Well, there's 3 options. You can coach them and try to get them to change, and sometimes they do that. You can pay them to stay home if they're a family member, or you can ask them to go ride a different bus and work for a different organization, if you get my hint. Okay. So what you really want to do is make sure that this discipline happens, because there are people inside of your business that will find reasons to not make it happen. You want segmentation visibility. You want to be able to track revenue and gross margin by product where possible, by service line or client segment. The buyers value what they can analyze. They're looking at risk. They're looking at ratios. They're looking at your history. You want to make sure you have good cash flow conversion. Strong EBITDA and weak cash flow raises due diligence flags. You want to monitor AR. AR is a place where a lot of companies struggle. And I would say, do you have an AR process in place? You know, how far out are you on average on your accounts receivable? What are your working capital cycles? And what are your inventory turns? Most CRMs will track this for you. There's a lot of software out there that can do this for you, so you're not trying to figure it out by Excel. And if you're like, hey, Scott, I don't know how to do this, you can go to a fractional CFO and you can pay them and say, hey, help me understand my financials a little bit better. This is a common conversation that happens a lot.
And message from your sponsor, Scott Sylvan Bell. That's me. If you're getting value from this episode, here's how to go deeper. First, subscribe to my weekly newsletter, The Party, at scottsylvanbell.com. That's where I share the strategies, frameworks, and case studies I don't release anywhere else. You'll get one actionable insight every week you can implement inside your business immediately. Second, while you're on the site, download the complete Sell Framework, Scale Framework, and Drivers Test, all free with scoring guides, worksheets, and step-by-step implementation checklist. These are the same frameworks I use with $10 million to $250 million companies to build systematic revenue, scale operations, and maximize enterprise value. Go to scottsylvanbell.com right now, subscribe to the newsletter, grab the frameworks, and let's keep building companies that command maximum multiples. Let's get going.
This is about the point where we got to talk about personal expenses and separation. You know, a lot of times founders, owners, entrepreneurs will blur their peaks between business expenses and lifestyle expenses. And what you'll find is this can erode buyer confidence. You want clean boundaries that protect your valuation. You're building a moat around your valuation. You know, you want to have that clean history. You want a revenue recognition consistency program. You want to you want to have revenue recognition consistency. You want to clearly distinguish recurring revenue from project revenue. You're going to put them in 2 different buckets. Predictable revenue on your end commands stronger multiples. Remember, we're trying to get you to the max multiple. We're trying to get you as much as we can for everything that you got. This will help you with forecasting accuracy. You're going to be able to compare projections to actuals quarterly. Like, you're going to be able to take a look at your history and say, where are we at? Buyers are going to test and say, hey, are your leadership forecasts credible? Are you actually doing what you said you were going to do? Because this is going to bring you to quality of earnings. Your organized financials and documentations, they shorten due diligence and they reduce surprises. The last thing you want to be is in the middle of a deal and have your representative call you, which usually what you might refer to as a salesperson or even the investor, say, hey, you know, we're going to have to slow things down. We have some problems with the books. And I've seen this happen a lot in just about every service sector, industry, where it's like, we got some problems here. We need to get some clarification on what's going on. And too many of those we need to get some clarification calls lead to what's really going on inside of this organization. If we take it over, what are we going to find and what are we going to uncover when we take over the business? You want talent when it comes to financial leadership because a capable controller or CFO reduces your transition risk. And it signals confidence to the buyer, gives you speed to the close. Not every time, but sometimes delays in figuring out the valuation of your company could be major dings or dents. And if you have your books ready and you understand the financials, you're able to have the conversations. Data room is a term that investors and private equity uses, and it could be something similar to a Dropbox, or a data room could actually be a physical location inside of your office or your building where you maintain organized contracts, your tax filing, your payroll records, and debt schedules year round. And you know where these things are at. Hey, they're in a drawer over here. They're on a computer in this file. Digitize is better. Some people are old school and they're like, hey, Scott, I don't want to do that. I want to give you a 12-month cleanup roadmap. You want to standardize the chart of accounts, shift to accrual where needed, and document add-backs and formalize a reporting cadence. You want this to be standardized as much as possible. Remember, you're shooting for the maximum multiple. You did not get into business for the minimum multiple. You did not go through the sleepless nights, having to hire people, dealing with negotiations to get the minimum. Go after the maximum. Run your business as if a buyer was going to review your financials tomorrow to make a purchase. Your clean numbers don't just support the price, they support the terms, which means you have the ability to ask for more money and get what you want.
Mahalo for listening to the Scott Sylvan Bell Business Growth and Exit Strategy podcast. Here's what's available to you right now. First, subscribe to this podcast so you get every framework we release. Second, visit scottsylvanbell.com to access the Sell Framework, Scale Framework, and Driver Test. All free with complete scoring guides and implementation worksheets. Third, subscribe to my weekly newsletter, The Party, where I break down strategies and frameworks you won't find anywhere else with one actionable insight every week. Go to scottsylvanbell.com and enter your email. And if this episode added value, share it with another business owner building a $10 million to $250 million company. Until next time, keep building companies that command maximum multiples. Aloha.